Good morning. I'm Fenwick Huss, Dean of the Zicklin School of Business, and it's my pleasure to welcome you to our webinar on big data. Joining me from the Dean's office this morning is Gwen Webb, Associate Dean, who will moderate the question and answer period. For our discussion, we're delighted to have with us today Roger Freeman, co-head of the data science team at Neuberger Berman, and joining him is our own Sebastiano Manzan, Associate Professor of Economics at the Zicklin School. Leading the conversation is former chairman of Neuberger Berman. He is an alum and our benefactor, and I'm also proud to say he is an instructor in our honors program. Larry?
Thank you very much, Fenwick, and I'm very glad to see Sebastiano and Roger here, because this is certainly a very topical subject we're discussing. In order not to spread ourselves too thin and get too deep into the woods, we'll spend most of our time on finance and academia, as that's where Roger and Sebastiano have a great deal of expertise. So first, let me just ask both of you, is big data the proper phrase to use when discussing the accumulation and transformation of large amounts of information?
I can jump in. Yeah, I think that's a fair term. I mean, if we think about data, big data and data science, I think big data is the data sets themselves, and data science is the application of statistical analysis on those data sets. That's the way I would think about it.
Sebastiano, anything?
Well, I think big data was already there. Maybe the name was not there, in the sense that, you know, if you think about government has been collecting a lot of information about individuals for a long time. We're running surveys, but, you know, we didn't call them big data. I think the difference is that now private companies are collecting this, and they're really getting large data sets. You know, think about Amazon and, you know, recording every click that we do on their website. So it gets really, really big, and I think it's an appropriate term to use.
Okay.
I just throw in, I think another way to think about it, just from a, to bring it down to home is I always tell people, if you can't load it in Excel, the raw data, it's getting into big data, right? I mean, you're getting beyond 1 million rows of data. And that requires different tools, different, you know, whether it's programming algorithms or other software to even begin to work with that data.
And just for our audience, I learned a new term in preparing for this week's webinar. I learned that from tweets and Google to Instagram to shopping trips to Amazon, everyone's creating a word that I'd never heard before, digital exhaust, through their daily activities. And this digital exhaust is what we're accumulating and hoping to gather, and using applicable technology, make extremely valuable. Have you heard the term digital exhaust before?
I've heard it oftentimes with respect to companies that are, through their own business processes, generating data that they don't think has any value, but in fact does, whether it's information about their manufacturing quantities, or whether it's unit selling prices or whatnot. And there are a number of consultants and vendors that go around and try to pitch companies on selling that data, so that they can then package it into data sets to sell to firms like ours.
And do you find data becoming more expensive, Roger?
Yeah, that's a hard question to answer. It depends on how developed the data set is. So there's a lot of growth in new data sets and new vendors who are trying. They may have a data set they're trying to commercialize. They haven't fully done it yet. And we actually like talking to those types of vendors, because they're earlier in their formation process. We can help to influence what that final output is going to look like, and in the process we'll negotiate a cheaper price for that data. But yes, I think for the established data sets, it is getting more expensive. The other thing is the frequency of the data delivery and how current it is. So for example, credit card data is something we use. We actually take a delay on that data because at Neuberger, we're not, we're not investing for the next quick trade. It's we have a longer term investment strategy. So having yesterday's credit card data isn't so important. And so we take a 2-week delay, and that reduces our cost dramatically.
And if you take that 2-week delay, does it put you in an inferior position vis-a-vis your competitors?
Versus the hedge fund, sure. But that again, we're not really competing with them and with our investment products the same way. 2 weeks still gives us plenty of view, even before most companies report their quarters. We can still have a view into what the report might look like if we have data that's got good correlation. So it's not if we were in that game of rapid trading, yes, then we'd be at a disadvantage.
But that's not, obviously it's not Neuberger's game. It's an investment business, not a trading business.
But it's probably a 10 times differential in price to go for in the case of credit card next day versus a couple of weeks.
Will we see a time when this is in real time?
Same day, probably. I don't know. Yeah, I guess if in the case of transaction data, you have to get point of sale data almost directly, but most of the sources are coming from, it's settled transactions. So you still have transactions got to be posted to somebody's account. So I would say yes. I'm not sure exactly how that'll happen, but for now, next day is already pretty good.
And Sebastiano, are you finding data becoming more expensive?
Well, okay, that's exactly an issue because as a macroeconomist, usually, the workflow would be getting data produced by the Bureau of Labor Statistics or the Bureau of Economic Analysis, monthly, quarterly data. Everything was available from government agencies. I mean, now, as a macroeconomist, if you want to work with big data, you have to buy data. And, that's something new for us in the sense that we don't have funds immediately available to buy this data. And also because there is no direct benefit from academic research using big data that we can monetize on. So it's a bit, our job is changing. And I think also there is a need for an agreement between universities and data providers in the sense that, we don't benefit directly from using big data, but, so our work can benefit society at large. So there should be some agreement, some preferential prices. I mean, there is an example that is the Nielsen consumer panel. So Nielsen is a company that, probably, looks at, it's a marketing company serving consumers, and they provide a data set at the product level, at household level, 60,000 Americans, and that's only for $3,000, only for research purposes. So I think that's the direction that we need to go to give an incentive also for academic research to use big data.
And I just want to give the audience a sense of what's going on here. I learned the word zettabyte while I was doing my homework for this. A zettabyte is a trillion gigabytes. And there are 33 zettabytes around these days. That's 33 trillion gigabytes, or the number 33 followed by 21 zeros. That's how much information right now, and it's obviously compounding by the day. So let me ask you, Sebastiano, what do you use this data for? What are you attempting to create? What knowledge are you attempting to advance?
In my field of research, what we're trying to do is to use big data to have more real-time and more accurate information about the state of the economy. So that's the kind of use that I do. For example, there are several examples. What I do for my research is to use text. So I extract sentiment from newspapers articles to try to understand if they are positive or negative about the economy. And, I can do that in real time every day. Also, policymakers are starting to use big data. For example, the Fed has an agreement for a payroll company called ADP, one of the largest payroll companies in the US. And what they get is weekly data on payroll, which allows them to calculate, measure the state of the labor market in real time and more frequently than official statistics. So the use right now for us is to use big data, more granular information, more frequent information to measure the state of the economy or the labor market, and measures like this.
So are you now taking words from newspapers and TV and the internet, God knows where, and putting those words in effect into a computer and measuring sentiment using those words? And
Yes.
seeing the difference between last week's words and this week's words?
Yes, that's the idea. So to try to read in a algorithmic way a newspaper article from the Wall Street Journal and transform that into numbers that can be interpreted as this article is positive about the economy or is talking negatively about the economy. And that gives me an indicator of sentiment about a certain aspect, the economy or the labor market or financial sector or monetary policy, that I can use to predict what the next release of GDP or industrial production or inflation will be, which are data that are released monthly or quarterly. And sometimes you want to have this information in real time. And for example, an example is at the beginning of the pandemic, the delay in macroeconomic variables was so long that policymakers had to make decisions in real time without actually having hard data available. And in these situations, having gathering information from big data could be useful.
Roger, I'm going to ask you the same question. You're collecting data towards what end? What purpose are you collecting this data for Neuberger Berman?
We collect data, alternative data sets to try to provide insights to the investing teams here, the portfolio managers, as well as the research analysts in the equities division, to help them make fundamental decisions about how to either rate stocks or in the case of the teams, to buy or sell or increase or decrease their position sizes. So, we're providing yet another view in the mosaic that's used by fundamental investors to assess the investment worthiness of a stock.
And does the initiative come from you saying we've looked over some things and we've discovered whatever? Or does the initiative come from analysts and portfolio managers who are saying, we're looking at this industry or this company, and could you add anything to our fund of knowledge?
It's mostly the second. So our data science team here is about 4 years old, and up until now, I'd say 90% of the work we do it's inbound requests, exactly like you laid out. It could be very general in nature, like on XYZ stock. Do you have any? Do you have data that would provide any interesting insights? Or it may be much more specific around a segment or a product line. Can you see what's? Can you look at trends? Or do you have a view going into the quarter? I believe that within the next couple of years, we'll be more proactive in screening from our end and going to teams where we know they own the stock or they've been accumulating and saying we have some views. But that requires really having a fully integrated data approach to looking at a stock and figuring out not only what matters for that stock, what are the key investment thesis points, do we have data that overlaps, and does that data provide insights that are trackable to what the company eventually reports. So there's a lot of sort of infrastructure in making that happen. Responding to the inbounds is a little bit easier because we're not surveying the whole landscape, we're responding to a question.
And where do you get your data from, Roger?
We have several data sets. Probably our most significant and most often used one is credit and bank transactions. And then we have that down to a user level, anonymized, but we can track cohorts of customers for a company or for a merchant, and we can track that person's own spending, how they've allocated spending over time, and that allows us to do a lot of creative analysis. We also have web search data, web traffic data, web search data. We have job postings data. We have a vendor that scrapes job listings for pretty much every company that posts jobs on the internet, so we can look at who's hot, where companies are hiring. We did that recently, looking at the Ukraine conflict and looked at companies exposed in both Russia and Ukraine based on how much, what percentage of their total job postings in the past year were in those regions, and so we could flag companies that potentially had some real impact from operations being interrupted.
And how critical are job listings in the ultimate success or failures of companies?
Well, in a case like that, we regardless of where their sales were, which often, you can't get sales granular enough broken down by country unless it's over some materiality threshold from an accounting standpoint. So, but even so, just because sales are coming from a location doesn't mean that there's not an important manufacturing facility or otherwise activity that's not directly generating sales in that region, but supporting sales in another region. So we think job postings, with the assumption that most of those jobs are getting filled in those locations, are an indicator of important business activity.
Interesting. Would you say that credit card data is still the most critical part of your input?
It is, because and by extension, the consumer sector is where we have where I'd say we have most of our impact. It's where it represents the stocks that we spend most of our time in, because consumer data is more readily available. B2B activity is not as ubiquitous. It's harder to get at some of that, and we're certainly constantly looking at data sets that help us on that front. But for example, one that we're maybe evaluating is shipping data. There's a company that basically sells the software that many companies around the world use when they're going to send container shipments. It's basically almost like a CRM software system where all the details of the container shipment are put in, where it's being sent to, who's sending it. And so that, speaking of exhaust data, that is exhaust data from this software product, and this company is commercializing that data, and potentially gives a view into worldwide shipping traffic. And so you could do all sorts of interesting supply chain analysis, or seeing how companies are shifting their footprint, their sourcing footprint around. That would be B2B. That would be a great data set if it. But it's a messy one. We looked at an early version of it, and you've got description data that's to what Sebastiano was talking about. You would really have to start doing NLP analysis on that data. You've got typos and everything else that you have to get cleaned up. So this company is now working with another company to clean that data up. We could do it, but it's tremendously resource intensive.
And can you go back? I don't want you to do anything current, because I don't want you to give up anything that you and Neuberger are doing. But can you go back in the past and give us an example of an inquiry that was made by an analyst, portfolio manager, and what the story was, how you responded, how it was helpful or not?
Sure. So there was this last year there was we got an inquiry from a portfolio manager who hadn't worked. I don't think he had worked with our data science team at all, and it's often. It is increasingly the case, which is our goal, is to touch more PMs across the firm. You always have to get over this hump. First, what is this big data and data science? What are you doing? Is this voodoo? Is it real? Does it provide real insights? And so we like the opportunity to talk to somebody we haven't talked to before. In this case, this PM reached out, and they owned a drug manufacturer called Zoetis. They make drugs for animals, for both pets and for farm animals. And they had a new drug launched last year called Simparica that was kind of in the blockbuster drug category for this company. It was a replacement for a prior drug. And his initial question was, is this going to cannibalize the old drug? And so we looked at that first, and we used web search data to see what the interest level was in the prior drug and the new one. And you could very clearly see when the new one was launched that the web searches started picking up for that. And the prior one did start to come down, but within 2-3 months, if you added the two together, they were above the prior drug. So the conclusion initially was it's not cannibalizing anything more than slightly. The net is that the two together, because they didn't discontinue the old one, the two together, it's 1 + 1 is 2.5 or 2 3/4. That type of analysis. But then we took it further. He wanted to get a read on what the sales of this Simparica drug, this new drug, would be quarterly. The company discloses it on their earnings call, but he wanted to see if we could get a read on it ahead of time. So we ended up. It was kind of interesting. Our web traffic vendor allows us to get very specific on URLs. So, for example, if on retail e-commerce sites, we can see if there's a checkout page. As long as there's a URL that's constant, the checkout page, we can actually see traffic to the checkout page. So you can see someone who searched, say, for Simparica, which retailer they went to. Whether it's pets.com or there were 3 or 4 others we looked at, and then if they further went to the checkout page, so we can see interest and intent, and so we were able to look at the top, basically the top retailers that people were directed to when they searched on the drug, and we were able to in aggregate correlate those checkout page views to sales for the drug, and it turned out to be pretty accurate. We actually were able to take it all the way up to the segment reporting level, which was the parasiticides, and it became a very useful quarterly check-in for this PM, the company. Now it's annualized. It's been more than a year, so that particular question isn't so relevant anymore, but it was for probably 3 quarters.
You find that occasionally, or maybe often for all I know, data leads you astray, that it's not good data, or it leads you to a dead end?
A lot. That's really the challenge. I think it's a challenge for, it's why the question of does big data and data science, is it a must-have for asset management, for investment research, and the jury's probably out on that, because it is not in any way a plug and play exercise. It's still very much of a, you got to QA, do a quality assessment on the data, figure out which data really matters, and do some rigorous back testing. For example, and so to directly answer your question, yes, oftentimes we'll get a question. Our course of action is we'll say, okay, we'll have a conversation, try to get at what they really are trying to find out. Then we'll go and do some initial analysis with our data sets. see if we have anything that's going to work. And I'd say, I'd say 60% of the time, what we ultimately come back with is probably not what the person ideally wanted to be able to get from us as far as either confidence in the data or directly relevant. And probably, and then a smaller subset is something that's truly useful. But, we also, it's also an iterative process. And there are names where we started out not having being able to have a good read. And as we worked on it and had more dialogue with the PM, we eventually were able to come up with something. And assuming you do, it doesn't mean that what you have today is going to be good in 3 months or 6 months, because things change fundamentally with the company. The data the quality of the data could deteriorate. There could be a tagging issue, a labeling issue on the transaction data. We find all these things. So we have to constantly be checking the quality of the data.
Do you occasionally find yourself at odds with an analyst or portfolio manager because what you're looking at is contrary to what that portfolio manager or analyst thinks is happening?
Sure. And I'd say probably
you're a very popular guy.
We just tone that down if that's we communicated, and I think it's so that comes down to one, how confident or what kind of a track record have we established with that person to trust in the analysis that we're doing, and how well are we expressing the confidence? Because if we're highly confident in what we're seeing, and we have a good working relationship with the PM or the analyst, it will influence their thinking. If it's an earlier stage relationship, or we haven't done a good job, or we haven't taken a strong enough stand, they'll usually I find it'll just kind of get discarded. Like, thank you, that's interesting, and then they'll ignore it. I think there's always a bias. Having been on the fundamental side of this business for so long as an analyst, is that you stick with your view. It's if you have your views and you think they're well grounded, it can take a lot to change somebody's view. It shouldn't, but it just does.
We're like everybody else. We want you to confirm what we already know.
Yeah, people like that.
Or we're certain of. Sebastiano, do you have the same kinds of problems with data that lead you astray from time to time?
Well, I mean, so talking about text. So, if you think about the Wall Street Journal, the point is, what do you want to extract from news, right? What aspect do you want to measure? Because, New York Times, Wall Street Journal, every day they have a lot of information. So the point is really to pin down. So big data offer a lot of information, and the issue is, what do we want to really achieve by analyzing, for example, newspaper articles? So I think also, as Roger was saying, it's a matter of digging to find the right spot that gives us the answer to the question we are trying to figure out. And it requires a lot of skills that in data management, in understanding the problem, and then understanding the data. And but so there is a lot of work to be done with big data, and that we're trying to,
I imagine you have to clean up the data. I imagine it doesn't come to you highly organized in the form that you really need.
Yeah, that's the issue. So, as an economist, you're not trained to do to analyze big data. So actually, I was on leave from Baruch College, and I was leading a project on big data and economic forecasting. And there, I realized that a all new set of skills are required from an economist, and actually we cannot even do it on our own as we used to do, right? So we used to download data from a website, macro data from a website, and feed it into the model. So the data management was minimal. Okay, now the whole process with big data is actually to create our own series, our macro series that we want to analyze. We need to create them by using big data, which opens and requires a totally different set of skills that I'm learning myself, but it becomes also more teamwork. So you need a computer scientist. You need also, for example, in the field of text analysis, you need also a linguist, that are trained to understand how to transform text into language. So it's an interesting innovation. Ultimately, I want to use big data to create a series that gives me a signal of where the economy is going or inflation is going. But to get to that series, it takes a lot of work.
60 years ago, I was a trainee at Merrill Lynch, and I was peripherally involved in a very crude exploration of what our clients were doing. And Merrill Lynch had mostly small accounts, small clients. And the theory was that they really didn't know what they were doing because they didn't have enough information, not enough analysis. And so we did an analysis of our clients to see what we shouldn't do, in effect. I'm thinking now that JP Morgan and Citibank and Walmart and Amazon and Facebook and God knows who else have this enormous database that they must be analyzing all day, every day. Do they have an enormous advantage over everybody else?
You want me to respond to that, or?
Please, Roger, thank you.
Yeah, I think those whether it be the large banks with their proprietary card data, the large retailers, I think they have a huge advantage. So certainly versus their competitors, and arguably, I mean, there's very valuable macro. I mean, a company like Walmart, I think probably has a very good pulse on the whole economy, the whole consumer, the health of the consumer, just by looking at trends in shopping patterns and habits, product substitution. I mean, they could see, trading up or down in the brand stack. I think, yeah, I think they do. And on the bank side, since obviously credit card data is something we're interested in, we do see a trend to where the big banks are pooling access to all of that in-house so that their own data science teams can publish studies on the insights from the card data, as opposed to letting that data be sold to firms like ours through third parties. So there's less credit card data becoming available for the general consumers of that data.
And is that also true of the Walmarts and the Amazons of the world, who typically don't do a lot of publishing, unlike the banks?
Yeah, I don't know where that data is more or less inaccessible. We don't have Walmart point of sale. The only way that type of data gets out, there is a popular data source, email receipt data, and we have some of that.
Their data for free.
Sorry, can you hear me still?
Yeah.
Okay. The email receipt data, there's several vendors that sell that, that they get it from apps and software that help consumers manage their spending. If you've ever signed up for one of the services that shows you how you spend your money, and they request access obviously to your email, and so they're grabbing any email receipts you get. So that type of data is available. Again, if the consumers signed up for these apps and they're getting email receipts, like for example, you go to Home Depot and you select, I want email receipt, that could be showing up in aggregated data sets, which is very useful. It's the only way to really get point of sale information at companies like Home Depot or Walmart. And that, speaking of expensive, that is expensive data.
I think Amazon has a policy that, you know, their data science team, they can publish articles using the data, but they cannot share data with anybody, not even aggregates it. So all the data that Amazon collects stays there. And they share also very little with government. So they're very secretive about the data they have and how they use it.
We had Amazon card data at one point through a vendor. I think it was able to grab it from I can't remember what the source of it was, but it was part of the web search data, because they could see subsequent, if they went to Amazon and then wound up in the checkout cart, they could grab the page. But that Amazon was able to cut that off. So I don't think, to your point, Sebastian, I agree. I don't think anyone's got that kind of insight. It'd be great to have, but we don't.
I think another point is that these big retailers, they have also the advantage of having a big customer base. So, you know, their sample, you know, could be reliable relative, for example, the example Roger made about the receipts, where, you know, it's not very clear the user base, where it's coming from. How representative it is if I want to make statement about, you know, spending, consumer spending for the US. So the representativeness of the sample is also an issue in some cases from these big data sets that, yes, they are big, but maybe they're not so representative for the US.
That's a very good point. Actually, probably worth emphasizing is that in I think many of our cases, we're looking at samples of data. Like when we look at credit card transactions, so one of the things we always do to assess whether there's statistically enough data to look at before even getting into the whole trend analysis is what percentage of the company's revenue that they report that lines up with the credit card data that we have. So for example, you know, our credit card data is US centric. So we'd be looking for like US revenues, but not that. We'll look at total revenues. What percent do we see? And for us, you know, a good percentage is 1.5 or 2% across our panel. Oftentimes it's a lot less. We were working on, we're looking at one last week, Etsy actually, which is ranges from 0.9% to 1.3%. But there's enough transaction there, and the correlation is very much high enough to use that sample. So yeah, I mean, no, it's right. It's rare that you see everything. Probably almost never.
Speaking of seeing everything, I want to move away from this for just a minute. One of the people I tend to listen to and read a lot about is Yuval Harari of Hebrew University, and he writes about the dangers of this information actually being able to hack human beings. And this information about human beings is now finding itself in two places in the world, the US and China. And he is fearful that the control of this information will make domination of the world potentially a critical issue for the world, because all this information, and people will be able to hack humans. They'll know what they buy, what they read, where they go, where they drive, who their friends are. They'll know more than the KGB ever knew in its best days. Is this a worry I have, or do you in your quiet moments think about this also?
Well, so on the political dimension, I cannot really comment, although, you know, I'm a bit worried personally about that. I think there is an issue of data privacy because, you know, all these big data sets they know, as you mentioned, you know, our behavior, our location, what we do, our history. They know a lot about us. And, you know, I think a good example to use is mobile data. You know, we are tracked. We have a mobile phone. We are tracked. They know exactly where we are, and you know, it can be used also for reasons that are not of public interest. And there have been an example, for example, of a data science competition in which a mobile operator shared data about refugee use of mobile phone, and they were able to track that they were working illegally and where. Okay, so of course, the research was just an academic work, but it could have been used by governments to crack down on illegal work. And then the issue is, would the refugee have agreed to share the data about his location, right? So data privacy is an issue that we need to address.
Harari says eventually this hacking will be so sophisticated that the machines using artificial intelligence will know more about humans than humans know about themselves. They'll know what they really want, what they intend to buy. He thinks that within some number of years, it'll influence where you go to college, what movie you should, maybe it's already true. Netflix tells you what to watch. Amazon tells you what to buy. Are we getting into a world that we really don't understand?
Well, I have a question for you. What will happen to portfolio managers?
That's for Roger to answer.
Yeah, exactly.
Manager.
Yeah. In what sense?
No, I mean, I think Larry is making the point that machines and artificial intelligence will, big data plus artificial intelligence will able to make a lot of decision automatically, know everything about it.
I think there are certainly efforts made to do that, and the systematic trading strategies are doing that today. But I think to the question of, well, a few things. I mean, and first, I think I was supposed to say in the very beginning that any opinions expressed are my own, not Neuberger, so I'm going to say that now. But I think that the issue of data privacy is clearly a very serious one. I think, in my view, you're just going to see increasing numbers of breaches. You already do. I mean, have you ever logged into gone through like the Google security check? I mean, I think I have a list of 43 compromised passwords right now. I haven't bothered to go through, and all right, these are all databases that have been hacked, and somebody has my password. And if I assume I'm not different than a lot of people. I use pretty much the same password, in most places. So if you know one, you probably know them all, or 60% of them. That's not smart. So I think we're all gonna have to get a lot smarter about using sophisticated passwords. But and look, and ever go and try and download your data. I am in the Google infrastructure. I have an Android phone. I've downloaded my data. I mean, it is just a wealth. I mean, everything that you've done for the past 5 years is there. Locations, restaurants, stores you shopped at. When you combine it with your health data, and you got your continuous heart rate tracking and stress levels and steps and everything. I mean, I can put together what I did a year and a half ago, almost to the T, without having any knowledge of what I did, just from that data set. And so, that getting breached, I think, I mean, if anyone who leads a secret life should be worried. I mean, it's definitely a possibility. But just quickly on the PM side, look, I think that I think that over time, there's going to be very sophisticated assistive tools from artificial intelligence, assisted with machine learning to help that portfolio selection process. I do think, I think it's going to be a long time before you could say that an algorithm, a computer could replicate the full human thought process that goes into fundamental security selection. There's still a lot of inputs, whether it be just conversations with managements, like things that aren't recorded, to reading body language. And yes, there are, we've been pitched by a vendor that's actually analyzing the tone of the conference calls now, and contrasting that with the transcripts. You'd probably like that, Sebastiano, and showing where a company is saying one thing and their tone is saying that they're lying. All those types of things. So those are some of the softer kind of inputs. I think all that stuff is going to come into some sort of automated, portfolio management tool set. I think it'll be a long time before you completely intercede the portfolio manager. I think they'll just get smarter and smarter with these tools. And that's how we pitch what we do too, is that this is another piece of the puzzle. You already look at a lot of different data sets and have a lot of different inputs. Here's another one.
I think as well that, in education at the moment, we are still not thinking about using big data and artificial intelligence to actually improve the way we deliver education. And that's, a discussion that we should start at a certain point.
It looks like Larry has dropped off at the moment. Larry, are you there? Okay, so Larry's having some technical issue. It is time for Q&A, and I'd like to continue with you, Roger and Sebastiano. During the whole length of your discussion, there have been a lot of questions, an unusual number of questions. And some of them fall in similar categories. There is a lot of interest in the integrity of data to be ensured, the quality of data to be collected, whether there's bias, not only in terms of collection, but in terms of presentation. Sebastiano, Roger, could you comment on that?
Well, at the moment, the data sets that are available are, as also Roger was mentioning, sometimes they are, just the raw data. This is what we got, just do the work yourself. So they're not very clean. And from my perspective, and as we were discussing before, one of the biggest issue is how representative is the sample. I'm not sure, it could be that it's manipulated, but, I'm not worried about that for the kind of work I do. My biggest concern is how representative is the sample, and can I extract information that gives me a measure of that is relevant for my work. So when you do forecasting, even if you build a bad measure that is biased, the advantage is it's either working or not. It's just, even if it's biased, but it gives me a signal, that's fine. I can use it.
Yeah, I guess from my standpoint, the quality checks are they're very important, and they fall into a couple of buckets or processes with us. One is the initial evaluation of a new data set. So we usually go through a trial. Anywhere from 30 to 90 days, sometimes longer, where we'll get a sample data set, usually historical for some reasonable period of time, like 1 or 2 years. And then we can run analysis on that data to see if we can establish trends that either are corroborated with other data that we have, or that that we can tie to reported metrics. And we're usually looking for some kind of ground truth to test the data against, and to try to find out where the biases are, where the gaps are, and we'll just do, and we even just do the basic plotting, like what kind of counts of record counts do you see daily, weekly, or the days of the week where it's less than others? Does it make sense, right? Then we are thinking like, okay, are there seasonal reasons why we might see totals or counts differ by time of year? And then usually we'll have back and forth discussion with the vendor with those questions, and then if we're satisfied the answers, then we'll move into sort of the commercial discussions about how to structure a license. But even then, after that, there's still the onus is on us to make sure that the data remains good, and to figure out, again, like on biases, where those are. Like, for example, credit card data, we break down into by state, and so we'll look at, are we seeing representative in aggregate, totals relative to the population in those states. And then to the extent, because nothing's going to be perfectly matched, then we can normalize to make it representative. Because oftentimes we're dealing with companies that they may have a geographic strength, West Coast, East Coast, or Southern, and so if we're seeing fewer transactions in California relative to what we should be seeing if we saw an equal number there, or a relatively equal number there, then we could be getting a wrong signal from sales in that company. So we do look for those types of things, and again, just because we have it figured out today doesn't mean in 3 months that something doesn't happen in the data collection process, or one of the banks drops out and suddenly we've got fewer transactions there. And so we need to make sure we've got that record. So the last thing we want to do is do an analysis, go back to an investing team, and then find out that afterwards the data was bad, because now you've got a credibility issue, and it takes a long time to dig out of that.
All right, thank you both. Another theme that's common across several different questions deals with privacy. And this is a theme that you had been talking with Larry a few minutes ago. What privacy concerns do you envision? How should we think about this? What should we as individuals be mindful of? And also in terms of not only the collection of data, but the disposal of data. Should we be concerned about firms retaining or potentially overusing the data that they collect on us?
Well, I could say just from our standpoint, we again, as part of the initial evaluation process, we make efforts to look at the data, especially if it's more in the raw category, make sure that we are not seeing what's called PII, personally identifiable information, because it's our policy not to work with that kind of data. I will tell you, we don't see that, and we've not yet had a vendor give us a data set that has that in it. So I think, it's, and certainly in Europe's even more focused on this, and vendors there are, to the point, it's gotten so difficult over there to the point where it's very hard to even get raw data from vendors in Europe. It's almost always aggregated now. So I'd say that the privacy concerns have actually resulted, at least for the time being, in data sets becoming less informative, less useful. Not as much in the U.S., I think, but I sense that that's going to change here as well.
All right, I'm going to jump ahead to a question closer to your business, Roger. The question came in: how much has Neuberger's data science team grown in the last 4 years? And the questioner says, by the way, the New York Yankees have about 8 employees analyzing player data.
What was that movie? Was Moneyball or?
Moneyball.
Yeah, great movie. Yeah, so I think we have 10 people now, and it's a mixture of data scientists and engineers and data analysts who have experience. I was originally in this category too, of having worked in the fundamental side of the business. So when I joined, I think I was the first one that had a fundamental background. I was an equity analyst for many years on the sell side, and so I had that perspective of how the output of this data analysis gets used for actually, as a consumer of that data to make investment decisions. So the answer your question is probably doubled in the last 3 years, probably about the size it will be, give or take 1 or 2. But and we're probably one of the larger data science teams. I think there are a few hedge funds that have more, but most of them are probably smaller in the single, 3, 4, 5 category.
All right, and this also is for you, Roger, and it's a direct follow-on. Given the growth in data analytics of your team, is this a career area that Baruch students should be looking at closely?
Well, I mean, if we're talking about biases, yes, I think so. I like I said, I was a sell side equity analyst. I started out in investment banking, then went into equity research, and I did that for 20 years. And I have to say, this, having pivoted into this part of the business, it didn't exist even 7 or 8 years ago when I wanted to do something like this, and now it is a real thing. And I have to say, it's so much more enjoyable now for me, because I have finance skills and I have tech skills. So for me, within Wall Street, this is kind of the one place I could find to use both of them actively day to day. So yeah, I highly recommend it. I think that there's going to be, again, just look at the stats like Larry was talking about, the growth of information, big data. There's so much that can be gleaned, even from some of the mundane data sets. I say mundane, like credit card data, that so many firms that do have data science teams already have. But finding new ways to use that data and getting creative is really great. So I highly recommend it. And I think that having a well-balanced training, i.e. both finance and whether it's computer science, data science, statistics, math, all of that together, I think makes you the most valuable here, because knowing how to communicate the output of the analysis is as important as doing the analysis itself.
All right, thank you, Roger. And I'm going to ask Professor Manzan our last question here. And again, I want to focus on Baruch students. What courses and what programs should our Baruch students focus on if they're interested in this area? Are there any particular courses they should be looking at? And should our undergrads be thinking in terms of a graduate degree?
Okay, so I think so, as Roger said, I mean, here we're dealing with data. Okay, so any course in econometrics or statistics that goes also beyond the basics is relevant. But then there is another dimension that is also managing big data set that requires different skills, things that might not be done on a personal computer. So there is a set of skills that is typically wider than just one individual program, either in economics and finance. So I think the best option for an undergraduate student is, to combine economics or finance with, as Roger said, data science, which used to be statistics, but we don't call it that way anymore. And definitely, an undergraduate in economics and finance does not have all the skills. So probably, and actually I'm getting more and more questions from my students, should I do a master in data science? Okay, so I think that would be probably a good combination, an undergraduate degree in economics and finance, and then a 1-year master specializing in data science where you gain all the skills. I mean, we're trying to introduce R and Python in our programs, but it's in limited places, and there is much more than can be done.
All right, well, we'll have to leave it at that. Our time is up. I want to thank you, Roger and Sebastiano, for your discussion, and of course for Larry. Our next webinar will be on June 14th. It's on whistleblowing. Good for society, bad for the whistleblower. It's with our Professor Valerie Watnick from the Law Department and Professor Jennifer Pacella from the Kelley School of Business at University of Indiana. Again, thank you, Roger. Thank you, Sebastiano. Thank you, Larry.
Thank you for having us.